as always, for your time and tuning in to yet another episode of taking a look at the largest markets in the world, taking a look at the foreign exchange market. Now, we're going to take a little departure on the actual currency conversation because, we've talked about the fact that I've been looking at the Australian dollar, the New Zealand dollar for strength overall, and those pullbacks are going to continue to be the gift that keep on giving. But I think that, there are certain times of the year, and we're getting to that part, where smaller markets, now anything smaller compared to the foreign exchange market, but smaller markets can affect change on foreign exchange. Now, typically those events are going to be earnings, when we have earnings of large companies that can move the S&P and the Dow, and what that does to the yen and the sort of flow in and out of currencies that typically strengthen when there's growth or strength in the stock market, and currencies that'll weaken, again, on growth or strength in the stock market, or weakness for that matter. I mean, we're talking about growth right now because we are most obviously in, I don't know how long it's going to last, nobody does, but we're in an asset bubble right now. So we're focusing on a little bit of yen weakness, Australian dollar strength, New Zealand dollar strength, and Canadian dollar strength. Canadian dollar strengths come on in a more significant way as of late because, again, equity strength does help the crude oil market, and Canadian dollar is not directly, not tick for tick, but it is tethered to the fortunes of crude. So we continue to look at that connection, that correlation between this this commodity dollar of the Canadian dollar, and crude. So I'm still very bullish the dollars. But what are we getting into here? We're starting to move into earnings. And earnings season is the season where the tail wags the dog. We have to deal with this 4 times a year, and we're slowly getting into that right now. In fact, Nike just had earnings. Now, Nike may not be the kind of name that's necessarily going to move the currency markets, because Nike is one stock that's weighted fairly significantly within one sector known as the discretionary sector, or the XLY ETF. And the XLY ETF is decently weighted within the NASDAQ. So you can kind of see Nike to XLF to NAS. But it's not one of those names that's going to be a big mover. So what are those names that would be a big mover? Apple, for sure. I mean, Apple is heavily weighted across the Dow, the S&P, and the NASDAQ. So Apple is going to be one of those big movers. Your healthcare sector, your financial sector, of course, tech. The number one weighted sector across all 3 major averages is the tech sector. And no more important a tech stock is Apple. So we have this phenomenon, if you will, of earnings season creating, typically disproportionate moves, because a single stock can have a large move affecting a change in the broader average then sort of, again, the tail wagging the dog, moving the currency market. Okay. And again, most notably, it's going to be the dollars of the Australian dollar, New Zealand dollar, and even the Canadian dollar and the Japanese yen. Those are the 4 currencies that I'll look at. Now, the other thing to think about is what we're dealing with as we wind down the end of the quarter. All right. So this is going to be something we'll deal with at the end of every quarter. This is something we'll deal with at the end of every month. So this is a little bit of I don't want to call it a seasonal, but there's a tendency for certain kinds of moves as we wind down a month and as we wind down a quarter. And a lot of folks would kind of separate this and say, well, that's a stonk thing. That's a futures index thing. That's not a currency thing, but it can be. And here's why and when. Probably the most significant end of quarter is June. It's the middle of the year. It's also what's known as the reconstitution of the Russell 2000. So what does that mean? I don't know if the Russell 2000 has an inferiority complex with the Dow, the NASDAQ, and the S&P, because in those markets, they just call it a rebalancing. But in the Russell, it's a reconstitution, which is fairly accurate, I guess, when you think of the word. So throughout the month of June, the Russell, the folks that run the Russell, are getting ready to sort of rebalance and reformat this 2000 stock index. And there are different versions of the Russell, but the 2000 stock version of the Russell 2000, which is maybe better well known by its IWM ETF, or the RTY futures contract. On the 26th, today, the last Friday of this month, it has the reconstitution. This is typically one of, if not the largest volume days in equities of the year. Pretty significant. So if we're talking about the tail wagging the dog, in this case, the tail is stocks wagging futures and Forex, this is the kind of day that could do it. We'll have wider swings in volatility. We'll have higher volume and to a certain degree, a larger amount of unpredictability. Now, there are some things to think about in June, and we'll talk about them again at the end of the next quarter, and we'll talk about them again at the end of the next month. Let's talk about the month first. So at the end of each month, and there's a really cool Finnish research paper. Well, it was done by 3 Finnish researchers, and it was called Dash for Cash. And it was written about, the Wall Street Journal had an article some time ago that talked about this Dash for Cash research paper. It's behind a paywall, but if you want to check it out, it's called, I think it's called Month End Black Magic, or How Funds Distort End of Month, something like that. If you Google that, you'll get the Wall Street Journal article. Unfortunately, it's behind a paywall, so let me give you the gist of it. So basically what these Finnish researchers found, and they'd studied back about 10 or 12 years, they'd found that at the end of the month, the phenomena of pensions and retirement accounts requesting distribution, in other words, we want to sell some stocks, we want a little bit of income, was most intense the last 8 to 3 days of the month, starting 8 days out, but most intensely the last 3 days of the month. For us this month, that would be Friday, Monday, and Tuesday. So that's the intensity of the selling. This month, we also had the end of the quarter, right? So we've got the bank stress test. So there's 2 different things going on, but they all kind of equate to the same thing, which is a potential selling in the equities markets. Again, think about where that would affect the Forex markets: Aussie, New Zealand dollar, Canadian dollar, Japanese yen. So the end of the quarter, there's some interesting shenanigans that tend to occur. And at the end of the quarter, mostly bank shenanigans, you have the stress tests. Think of it as a test you're cramming for, and at the last minute, you want to do pretty well. So it's called window dressing, all right? Everyone denies that window dressing occurs, but the Bank of International Settlements has done a paper. I think I've seen articles dating back to maybe 2014, maybe even 2012, but 2014 is the one that comes to mind, where they talk about this phenomena of what's known as a reverse repo window dressing. Now, you don't need to know what any of that means. Here is the punchline. It typically means banks raise cash, they sell stocks in order for their balance sheets to look possibly safer than they really are. Now, is this a permanent thing? No. In fact, just yesterday, we eased the Volcker rule. We basically sort of took some of the restrictions that banks have been under to curtail their speculative, risky activity. We just eased that. We, meaning the U.S., just eased some of the Dodd-Frank Volcker rule of that was enacted in 2010, I believe it was. So the banks got a stress test, which is kind of bad news because now they're being graded. And then they got this easing of the Volcker rule. That means, yay, we can go back to shenanigans. And so kind of a mixed picture in terms of the way the banks responded. But they still did what they do every time we have a stress test. We saw some selling Thursday before the selling Wednesday before the stress test Thursday at 4:30 p.m. Eastern. So normally, it's kind of hard to time when the reverse repo, when the window dressing is going to occur, but typically it's going to be 24 to 48 hours. Usually I look for about 24 hours, but it really was much more emphatically 48 hours out into the day of the stress test. So next time we have the stress test, look the day before for potential selling. That's the window dressing. That's the reverse repo. That's making their balance sheets look potentially less risky than they might be come July 1, right? I mean, the inflows are going to be a factor. Let's talk about the inflows. We talked about the outflows. What are the reasons that at the end of the month and at the end of the quarter, we could see weakness? Now, I'm not saying what anybody's doing is wrong or right. I'm just saying these are tendencies, okay? I'm also not saying they'll happen every month. So, hey there, Deborah. Hey, Mark, good to see y'all. If you guys have any questions, feel free to type them in. We'll be together here for a few more minutes. But, well, since you guys are here, so far, does that make sense? What happens at the end of the month? The white paper, if you want to read it, is called Dash for Cash. And the phenomena that I'm talking about that happens for window dressing is known as a reverse repo. Okay, you can Google both those. You really don't need to know what they are, how they're done, but what you really want to do is focus on the fact that you're more likely to see weakness in the equities markets. Okay, based upon that, momentary. So we expect an unwind of positions, again, based on pensioners and retirees getting distributions from their investments. We expect this at the end of every month anyways. That's what Dash for Cash was all about, which means you might see a pullback in the Australian dollar, Canadian dollar, New Zealand dollar accompany that. You might see a little strength in the Japanese yen, again, accompany that. Those are how the ripples of this tail wagging the dog tendency, that's how it kind of reverberates to larger markets. So look for that tendency, look for that opportunity, look for that timing. The other thing is that in an uptrend like we have right now, we're in an asset bubble, gang. We're in some kind of uptrend, all right? When you're in an uptrend and you've taken distributions, are you more likely to put money back into the market? Well, history says yes. History says that normally, especially within the context of an uptrend, after the redemptions, the last 3 days of the month, the first 3 days of the new month, you start to see inflows. So outflows the last 3 days of the month, meaning June, and then inflows going into July. Inflows mean what? Well, the stock market's going to be potentially bought. I am not anticipating any of the weakness that we have seen over the past 2 weeks, give or take, since June 10. I'm not expecting any of that to shake up this uptrend quite yet. In fact, I'll even go so far as to say, looking at the specific companies like Apple, who have said they're going to reclose certain stores in certain states, we did not see a big sell-off in Apple. We did not see a historically price movement range sell-off in Apple, hardly at all. Apple, I think, printed an inside day. When you take a look at some of the reclosings in certain countries, or you look at some of the COVID counts increasing in certain countries, again, you're not seeing big pullbacks in the larger averages. And why, you might ask? Well, it has to do with central banks, and that has everything to do with what we play in the Forex markets. Central banks and the investors who are watching them, like us, central banks know they're going to have to keep their foot on the gas pedal in terms of liquidity, whether that be the US central bank, the European central bank, Australian, Japanese, etc. They've got to keep their economies essentially propped up under the pressure, this economic pressure of the shutdowns and COVID, by adding liquidity to the markets, making loans, etc. All the things that we've been hearing about the last 60 to 90 days. So as long as they keep that up, investors know this, right? They know this. And they know the worse the data gets, the more these central banks will be forced to do this. That's where you turn it into this good news is bad news, right? That's where you get that flip. The good news is bad news. The bad news is good news, right? So what you have then now is every time we get disappointing data, whether that be growth, GDP, inflation, PCE, which we had today, CPI, whether that be any kind of negative factor on the stock markets or the economies, central banks are going to get to work. They're going to blip that throttle and try to keep the economies going with the main weapon that they have, keeping rates low and keeping money freely available, keeping those loans flowing. So would I anticipate the Australian dollar is going to about face and start heading lower? No. Do I expect to see a bunch of yen strength in terms of a flight to safety into the yen or even the Swiss franc? Not right now, gang. Do I expect to see stocks continue to move higher on bad data? Absolutely, because what is bad is good, right? Keep that in mind. All right, what happens the first day of the new month and new quarter? We typically see what's known as inflows, and you're going to see more risk on positions placed. Long stocks, long Australian dollar, long New Zealand dollar, long Canadian dollar. Again, generally, you're going to see the flows into risk on, risk appetite names. US dollar, Canadian dollar. Raj, I would actually say that if you're going to play the Canadian dollar right now, I'm looking Well, here, I'm going to actually refer to some of the notes that I've given. So the Canadian dollar plays that we have right now are Australian dollar, Canadian dollar, Japanese yen, and pound Canadian dollar. Um, so I like the pound Canadian dollar a lot, actually. We can look at a short in the dollar Canada. I'm actually bearish. So what I'm referring to, by the way, gang, these are notes that I give our Forex Mastery members. So by the way, I'm literally reading the notes that I give them. These are my research notes. These are my trade notes. And if you're interested to check it out, you can head on over to simplertrading.com/FX and get these kind of notes from me. So I'll read right from the notes specific to the dollar Canada, Raj. I'm looking at selling the dollar Canada. We're talking about daily time frames. And I'm looking at selling the dollar Canada. I keep an eye on the 137 handle for resistance. All right. So what else do we have here? So again, we're looking for inflows on risk appetite. And let me give you, Raj, again, my full list. I'm looking at specifically buys, which I'm long from right now, the 90 to 85 level on Australian dollar, Canadian dollar. We're looking for a buy on Canadian dollar, Japanese yen. Canadian dollar, Japanese yen is really very much a play on long crude, long stocks, long Canadian dollar, short yen. So long Canadian dollar, Japanese yen might be a really good one for those of you that believe that this asset bubble in equities will continue, which will create more weakness in yen. Now, anytime we have a sell-off, meaning we might have some opportunities Monday and Tuesday if there's a sell-off in equities to engage the Canadian dollar, Japanese yen. And I'd keep a really close eye on the 78 handle on that pair on the daily time frame. All right. So those are two that I really like. Is the US dollar going to collapse with all these debts? Not yet. Remember that the US, and I say not yet, not to be cute or foreboding. One of the things to remember about the US dollar is that it still is the reserve currency of the world. It's still the currency in which all debt is denominated and the currency with which most commerce is done. So the sort of special privilege of the reserve currency is to do really irresponsible things. And that's what our Federal Reserve is, you can argue, bordering on doing with all the printing. So we have this latitude being the reserve currency. The US dollar has this latitude. When does it catch up with it? That's anyone's guess. But for now, just remember, it is the reserve currency of the world. And with that, there's a privilege. And the privilege is sort of irresponsible monetary policy, which we have definitely stumbled into. All right. If I ended up a little cash with a foreign, if I ended up with a little cash in a foreign currency yen, what do I do to convert it back to US? It's actually a small negative amount as a result of my first fumbling around with a practice trade. I do not have a position. Kevin, I'm not 100%. How do you convert it back to US? You're talking about you bought yen short of US dollar? I'm not quite 100% sure what you mean in terms of the position. Kevin, here's this, and this is for anybody. You guys can hit me up at Raghee, Raghee, at simplertrading.com. Kevin, send me what your trade is. I'm not quite following. So if you don't have an open position, then you just have a trade that you completed, right? Just make sure you close the trade. So I'm not quite following, but if you're still, first of all, call your broker. I mean, if you're concerned about the position. Second of all, if you're curious about the trade itself, feel free to take a snapshot of the trade and email it to me, and I'll be happy to take a look at it. All right. Okay, gang. And with that, we have wrapped up our episode, this current episode, last episode for June of the Forex Friday. So I will see you all I won't see you guys next Friday because the equity markets are closed. We're going to take next Friday off. It's the holiday in the US for 4th of July. But let me mention something. The Forex markets close next Friday. They're not. There's only 2 days a year that the Forex markets are closed, Christmas and New Year's Day. Other than that, 4th of July is just another day in other parts of the world. But remember that most of your liquidity is going to come from the overlap of Paris, Frankfurt, and London. So can you trade that session next Friday? Absolutely. By noon next Friday, wrap it up. Really by 11 with the European close, wrap it up. The US is the second largest financial center in the foreign exchange markets. So you can trade next Friday. Just check with your broker what their operating hours are, but you can trade next Friday. Just remember that there won't be a US session to follow or overlap with that European UK session, but it is a viable day earlier in the session, okay? As always, gang, thank you so much for your time, and I'll see you the week after next. All right, gang. Thanks as always. Be good to each other.